Hey guys, how's it going? Value Venture Investing here today. So today we're talking about Air Canada. They just released their Q1 2023 earnings, and a couple of days ago they came up with some pretty big news. Now, taking a look at the stock, it was relatively muted on Friday when these earnings came out. It was pretty, the markets were down, not really much happened, but about 3 days ago, I think it was about 3 days ago, Air Canada came out with this news, and of course this was the big news in terms of the outlook. They stated for the second quarter of 2023, they plan to increase their ASM, which is their available seat mile capacity, by about 22% from the same quarter in 2022. They also gave a little bit more light on this as well. They said that the ASM capacity about 23% increase versus 2022, and this is approximately 90% of the 2019 levels, which is that key metric that key year that they keep comparing it to. Their adjusted CASM, they said it's going to be, so that's the cost, is going to be about 0.5 to 2.5% below the 2022 levels, and their adjusted EBITDA is about $3.5 to $4 billion, and of course that's about $1 billion more than they originally anticipated. And I think a lot of this has to do with fuel prices being a little bit lower than they anticipated. So in this video, we're going to go through their financials. I compared from Q2, Q3, Q4 2022, and of course this quarter right here. This is the quarter we're in right now. They do like to do the year-over-year comparison, which is very helpful because traditionally this quarter isn't super strong, even though they talked about on the conference call that they're trying to diversify with Sun and Fun and stuff like that, so to not have these big swings in earnings. But in the financials, we'll be able to see that year over year a little bit, and I'm going to reference it a little bit. We're going to go through the financials, and then I'm going to come back and talk about some things that were talked about on the conference call, and then I'm going to give you my thoughts on the quarter as a whole. So passenger revenue was $4 billion, so $4.08 billion. We'll get into that, but there was actually a record. Cargo revenue was $238 million, slightly down from last quarter. But it's been pretty in line. They talk about them wanting to continue to diversify with that passenger revenue, but of course some of their aircraft got converted because there's so much demand for passenger revenue. Other revenue was very strong as well, $561 million. It was $330 million the quarter before, $223 million, $241 million. So a lot of that had to do, I think, with the Sun and Fun destinations, more of selling stuff on board, onboard fees, stuff like that. So that was pretty significant, although they didn't get into that in too much detail. So the total revenue was 4.88, so basically $4.89 billion, and net income of $4 million. However, that net income, it wasn't really an operational net income. They actually lost money operationally. It had something to do with their income taxes, but we're going to get into that when we look at their financials. So their EPS was a loss of 3 cents per share. Cash pile is still very strong, $8.517 billion. They got a liquidity of about over $10 billion. So they do have some debt. They're paying down that. We're going to get into that in a little bit. So let's take a look at their financials right now. So taking a look at their balance sheet here, again, here's their operating revenues. This is for the first quarter of 2023 compared to the first quarter of 2022. You can see that huge jump in passenger revenue, 4.08 versus 1.9 billion. Cargo was down slightly as we spoke, and the huge increase in other, it was 258 million a year ago, 561 now. So we look at our total revenues of 4.889 billion versus 2.5 billion. So huge increase there. Their operating expenses have also come down, gone up quite a bit, of course. Aircraft fuel is a significant one, $1.3 billion versus 750 million a year ago. That's going to happen when you're flying more, but also fuel prices have gone on quite a bit, right? So their total operating expenses were 4.9 billion versus 3.1 billion a year ago. So that gave them an operating loss of $17 million. But still, even in that, because of the increase in demand, the amount of revenue that they've been able to drive to that top line, they only had a $17 million loss versus 550 million a year ago. Of course, there's non-operating expenses and incomes as well. Got a little bit of money with $127 million there for foreign exchange, which was a little bit more than the year before. They did talk about their interest income as well, $83 million versus 20. Well, that's because they have investments and stuff as well, right? So interest rates have gone up, so they're making more, but then they've also have an interest expense. But that isn't too much more than a year before. But they talked about this is going to be something that they're going to basically do it year by year. A lot of their fixed debt is pretty low. The floating stuff, they have the time to make the decisions. So right now, a lot of their interest income is pretty high. So it sounds like they're going to keep a significant amount of their debt, but they did pay some down. We'll get into that. So the total non-operating expense was $6 million. So the loss before income tax was $23 million versus $814 million a year ago. And then they actually had an income tax recovery. So it was due with some deferred revenue or some deferred income tax, which was a gain of $27 million you see here versus a loss of $160 million a year ago. So that's what actually gave them the $4 million net income. And a year ago, it was close to $1 billion. So that's a huge difference when you look at that. So I think part of the reason the stock didn't do too much is because they really didn't have positive earnings, but at the same time, it's a massive improvement. So the net loss per share, when we look in it, terms of basic cent, diluted, we got a loss of 3 cents. Taking a look at their balance sheet here, looking at their assets, total cash equivalents, and short-term investments. That's what we said is $8.517 billion, up a year ago where it was just under $8 billion there, $7.99 billion roughly. Another thing I saw, total current assets here. They got investments, deposits, and other assets of $1.2 billion. That's gone up slightly. But I've actually never even noticed that before, to be quite honest. And I was wondering if anybody knew what that was, or if they'd referenced that, what those were. And it's essentially where those sit. I mean, are they considered long-term investments? Like their current assets, they have short-term investments. Are they considered long-term investments? That I'm not too sure. In terms of their liabilities, not too much interesting here, but they do have their long-term debt and lease liabilities. There you go. They got about $14.9 billion in debt. Of course, we know that this is something that's come, as of what has happened. They had to take on all this debt. They still paid it down significantly. It's $14.9 billion right now. A year ago it was 15. It was over $15 billion. So they're slowly paying that down. So that's great to see as well. Take a look at the statement of cash flows here. Something I really like to see here. The net cash flows from operating activities. Operating cash flow, $1.4 billion versus $67 million a year ago. So really good. In terms of their financing here, proceeds from borrowings, $84 million versus $38 million a year ago. And again, we see here the reduction of the long-term debt was $377 million. So that's that difference that we were talking about there versus $231 million a year ago. And they issued 1 million in shares, so a little bit of dilution there. So in terms of financing, they had a $292 million outflow versus $192 a year ago, pretty close. In terms of investments, this is something, if you watch my last two videos, I kind of like to talk about a little bit. Investments in short and long term, $296 million versus $972. It seems like every company is starting to invest a little bit less in terms of their investments, maybe with the environment we're in, but it's good to see with Air Canada. I'd rather see them, potentially be paying down their debt to get that liability off the balance sheet before they're doing too much of that. So their net cash flows used in investing activities was outflow of $749 million, and it was $1.2 billion a year ago. So that was quite a difference there. Cash and cash equivalents at the end of the period were just over $3 billion versus $3.3 billion a year ago. So now taking a look at some of the things that I got from the conference call. There's not a lot here, but basically kind of what we talked about, $2.314 billion increase from the same period. Of course, that's Q1 2022. This is mainly due to travel demand, and this was actually up 10% over Q1 2019. So they have that comparable quarter where it's very strong. Also, premium cabins, they're saying, is the more high ticket value seats it's very strong demand, so that's very encouraging as well. So this was, we've talked about this was a record for passenger revenue in Q1. So that shows you something about the demand going forward, right? I mean, this isn't traditionally, like I said, a super strong quarter, but when we do hit the super strong quarter, what are we going to see? This was a record, and it more than doubled year over year. And this is mainly due, they talked about sun and fun and international travel that fueled this passenger revenue, which was a record. Their operated capacity increased approximately 53% from Q1 of 2022, and this is about 84% of Q1 19 levels. I think we're talking about the mid 90s coming up soon here, so we're getting very close to being back to where we were, those super high demand areas or times. Again, cargo diversification. They still talked about how they're going to continue to diversify as well. They did have to, this is one of the reasons that the cargo revenue is down a little bit. They did have to, move some aircraft, change some aircraft, put it back to passenger service, but it's still something that they want to focus on going forward. And I highly encourage that because that's going to really even out their earnings, right? When you have a very strong quarter of passenger revenue for travel, hopefully this is going to be something that's like a hedge almost. It's going to offset that a little bit by being kind of a little bit more stable. On that note, they're adding to the fleet. They're adding both passenger and cargo ships. I think it's because I just did Virgin Galactic. Planes. It sounds like they're going to do one more this year. And in terms of their guidance, we already kind of talked about this, but for Q2, so next quarter, Q2 2023, they plan to increase the ASM capacity by 22%. So that's kind of what drove the stock before. So in terms of the reaction in the market, it was down. I think maybe it was a little bit muted because we actually really didn't see a gain. It wasn't huge, but demand has been significant. It's already kind of baked in because they already pre-released those numbers in the guidance, and we saw the stock go up about, I think it was about 11% that day. So as usual, I'm still holding my shares. This will be a $40-$50 stock in the future. I've said before, I don't know when. It's taken a lot longer than I anticipated it would. Probably a lot of this has to do with the debt on the balance sheet, but all the concerns about the growth going forward seem to be alleviating. But I'd love to know what you guys think. Let me know what you think of the quarter. Where do you think the stock's going to be going in the next 6-12 months? A little bit longer. I'd love to know. Don't forget to like the video and subscribe, guys. Really helps the channel. That's going to be it for today. I'll see you in the next one.